there are occasional times in price where we'll get an extremely volatile move either up or down, usually due to a news announcement or something like that. And when this happens, it may not leave you with an opportunity to get involved via either a breaker structure or a change of character, leaving this wide open range for price to move in. So what we can start to do, if this does happen on those rare occasions, is to start to look at the internal structure of that leg. So you can kind of see in this case that price would have been moving at a certain speed, at a certain pace, or certain volatility before the move, and after the move it kind of returns to that same size of movement. So that's one thing you want to look out for with the internal structure, and then you kind of want to look out for a order flow being built. You can see we've created a low here, and obviously the swing high would be up here. But you can see we have this internal high and then a low, then another high. So it's at this point, once we've made that low, high, another low, and then another high, that you can start to look at this internal structure. And now if you think about it, after we have a move like this, what we're kind of looking for is a move back to the premium of the area. And most likely some sort of supply or demand zone if it's a bullish move. So if we're thinking of making it back up to this area, we can kind of play these movements in price up until we get to a significant zone in this area. So as you can see here, we get this break, internal structure break, and then we could, look at this, as long again as we mitigate to the discount in this case of that zone, and we know that the order flow, the internal structural order flow is in place, we can get in on these moves. So you can see here we've had internal order flow, and then we've broken again, so we could look to this area to get involved in buys up to this area. So right here we could have gotten involved, and then we get another break of structure here, and we can use our tool again. Now, same as in if we're looking at normal structure with major and minors, we have this internal major and minor flow here, so you can see we didn't mitigate this discount. And price has continued to move up, and then we come back down to eventually mitigate what was left before, so we could have gotten involved in a buy in this area, and then price slowly but surely pushes upwards and we make way into this supply zone up here, in which case we could look for shorts. So yeah, that's internal structure in a nutshell. It's the kind of thing that you want to use sparingly. I'm not the biggest fan of internal structure, as it's not sort of, there's no real set in stone rule as to where to start and end with it. But really you want to look out for this order flow and highs and lows being built before getting involved in anything to be safe. And yeah, only really use it when you have these big volatile moves due to news. Don't just look at it willy-nilly. So yeah, we'll get into the charts now and look at some examples of where we could use this. So looking at price here, we can see that this candle sticks out like a sore thumb compared to all the other candles, and obviously it was caused by some kind of news that happened at the market open on this day. So if we look at price before and after this candle, we can see that this price here matches kind of the volatility of the price before it. So we can kind of see the price has returned to normal at this point. So once price pushes down like this, what we can see is that we create a low, a high, a low, a high, a low, a high, a low, and a high. And at this point we've tapped into quite a zone. It's a higher time frame zone most likely, in the definite premium of this leg, and then price has proceeded to move to the downside from this point. Now as you can see as well, there are mitigations, so this is mitigated to the discount, then this leg gets mitigated to the discount, and then this leg gets mitigated to the discount. So there is nice order flow being built. So at this point here, it would kind of have been safe to take an entry based on the price moving with clean order flow, and then once price came down into this discount again, you could again look for continuations moving up. So yeah, these are kind of the situations that you want to look out for. It doesn't happen very often, but when it does, that is when you can start to look at this internal movement of price. So yeah, just look out for that low, that high, and that low being there. Ideally, what you might get would be some sort of change of character. Say, in this case, it just came down, made a high, and then made a low again, and then it's much easier to see, and then that just becomes substructure instead of internal structure. It's when there's not even a change of character, that you get this purely internal structure that you have to look at. So yeah, that is that covered.